I think this is a good time to give you some context beyond the headlines. Because in the context, what's happening in the housing market is actually healthy, not toxic. And I say that knowing that KB Homes, which just reported, disappointed some who are looking for better numbers. For a clear head of what's going on, I'm turning to Doug Yearley, the CEO of Toll Brothers, not just because he runs a giant home builder, but because I've known him for years. And when things aren't good, he's always been forthcoming about it, as has his previous boss, Bob Toll. Not that long ago, Doug threw an important and incredibly enlightening analyst day, you can read it online, to explain why the housing market's growth might actually be longer term than you think, rather than the cyclical boom and bust kind of growth that we've all come to expect. Listen to this. Over the last decade, 6 million less houses were built. 6 million less houses were built than in the previous 4 decades, going back to the 1970s. He goes on. It's possible that housing is just beginning to recover, given that we have many more people in this country than when we were building more homes, end quote. Yearley's conclusion, quote, it's going to take a long time for this pent-up demand to be satisfied. We think it's going to take years before we ever get back to anything close to the equilibrium that we had seen in a bunch of the prior decades. That's right. We used to build 2 million homes a year when we had half the population. Now we're doing half that with twice the population. Now, if you think that Yearley's just talking this book, and I get that, I am sure the skeptics out there doing that, why don't we do this? Why don't we go to Stuart Miller? He's the straight-shooting executive chairman of Lennar, another exec I have known since he was a young man, and I helped manage his brilliant father's finances when I was at Goldman Sachs. Miller tells us, quote, new home construction cannot ramp quickly enough to fill the void of the production deficit that has persisted over the past decade, end quote. He continues, quote, while some question whether that deficit is 1 million homes or 5.5 million homes, the bottom line is that supply is short and is likely to remain that way for some time to come, end quote. That's right. We literally can't build new homes fast enough to meet the demand. Now, let's say, okay, let's do what everybody tells me has to happen. If Jay Powell raises interest rates, that's not going to create more homes. Even if it might push down housing prices by, of course, destroying demand. Then again, it could also make housing less affordable by driving up mortgage rates. Hobson's choice to make. But a lot of that demand might be indestructible. If we just give it some time, it'll be good. It'll be a good thing. As Toll's Doug Yearley lays out, quote, there are 73 million millennials who are now entering their 30s and they're buying homes, end quote. Now, this key ineluctable demographic detail always gets left out of stories about the red-hot housing market, and that's just plain misleading to do so, because it means that demand may be, and here's a word no one ever wants to use with housing, but I'm going to use it. The demand may be secular, not cyclical. The Fed can try to slam the brakes on the economy by raising interest rates, but millennials have been stuck living in their parents' basements for years. After a decade getting over the financial crisis, they've finally got the capital to buy their own homes. Why would we want to put a stop to them buying their own homes?
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.